Hello and welcome to this Monday edition of FreightWaves Now. I'm your host Anthony Smith, and coming up we're going to have Luke Falasca giving us an update for the brokers. We also have Mike Baudendistel with us with the rail and intermodal update, but first we're going to go to Zach Strickland with the carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your Monday morning carrier update presented by PowerFleet. I'm Zach Strickland. So far, we have not seen any significant impacts of the coronavirus in the freight market just yet. And we're looking at volumes behind me here. The outbound tender volume index running about on par with what we normally see this time of year. The outbound tender volume index, fun fact, created on March 1st, 2018 with a base level of 10,000. And right now we're running at about a 99.78. So we're roughly only about 22 basis points underneath what we would normally have expected, in 2018 when the market was supposedly blowing up. So we are really on par with where we expect freight volumes. This time last year we were running a little bit higher, around 10,000 or so. Again, starting to correct a little bit, but still 99.78, not that bad this time of year, right on schedule, right where we're supposed to be. So, I know everybody's been talking about the virus and everything. We're just not seeing it materialize just yet. It probably will, though, here in the next 4 to 6 weeks, however that materializes. So, looking at the overall volumes itself, van outbound tender volume index sitting around 7160, reefer outbound tender volume index sitting around about 1373. So both van and reefer volumes are starting to increase as we enter the month of March. Nothing out of the unusual right there. Looking over here at some of the, the lengths of haul, things that we like to see, because short haul volumes don't necessarily impact the freight market like the long haul volumes do. So looking out here, we see long haul is leading the pack at a 25.17, so roughly just underneath, well, probably just around 27% of overall volumes in the United States, but it is down 1.08% week over week. So we are seeing a little bit of contraction there. Short haul volumes coming up just a little bit, 0.5% there. City outbound volumes again increasing as well. So we are seeing a little bit of a shift in overall volumes with the longer haul freight diminishing, shorter haul freight coming up just a little bit. So longer haul freight does have a little bit harder impact to capacity overall, but we are not seeing capacity really, it's not tightening that much right now. We're seeing it kind of hold steady. We're around 5.3% on the overall outbound tender rejection index, down from about 5.6% this time last week, but still relatively sticky in that middle ground of 5-point-something%. So looking at the weighted rejection index for the United States, we are seeing a little bit more blue materialize, but that is more of an impact, or more of an effect of just a very flat market in general. So we're starting to see that scale contract a little bit. If you see the highest weighted rejection index over here, about 3.64%, I believe that's in the Denver market today. That is not a very big number for the weighted rejection index. We normally look for real significant volatility moving between about -5 to 5 on the weighted rejection index. Down here we do have a -7.05, and I believe you're looking at the Salt Lake City market, which is starting to really settle down after having a more volatile segment here in the month of February. So anywhere out here, you really don't necessarily, you're not going to see as much activity in the Harrisburg markets on the spot side. You're going to see a lot less activity on Salt Lake City. Not necessarily a lot of tightening going on in the country right now, but some of these markets may have a few little bubble ups. You certainly want to continue to watch the Denver market, which has been a little bit more active lately. I wanted to point out the Indianapolis market. The Indianapolis market, one of the biggest freight markets in the Midwest. You see this right here. This is the outbound tender volume index yearly change. Volumes are up 8.54% year over year. Tender rejection rates still down about 260 basis points versus this time last year. So this is going to be a market that's interesting to watch, especially on RFPs and bids moving forward. Increasing volumes, rates may not be as robust. And that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Good morning, everyone. I'm Luke, and I'm bringing you another broker update. And happy Monday. It's a brand new month, brand new week. Time for good things to be happening. All right, so we're going to be looking at the chart behind us here. So in blue, tender rejections, not much change. We've been flat really the entire month of February, and it doesn't look like really anything is changing. In fact, a tiny little dip there towards the end, sitting at about 5.3% there in the bottom right-hand corner of your screen is those tender rejections. Now, what is interesting is this green line. So these are the volume levels here. So if you look over here to my right, you'll see we're sitting at just under 10,000. That's really good growth. Really since, I'd say probably the last third of February, we started this really good climb, and we've really started to push higher and higher on the volume level. So while tender rejections are still suppressed, and it looks like even dipping further, volume levels are up. Great opportunity to look there for growth is in volume as opposed to higher margin lows, which are going to be difficult to find as tender rejections continue to be suppressed. So let's go ahead and take a look at our call map for today. We're looking at this is the outbound tender volume weekly change. So as of this morning, so markets in blue are going to signify growth in volume over the last week. Markets in red are going to signify contraction over the last week. Now, there's actually some quite significant movers. Some of these really dark blue markets here are going to have seen growth of over 40% over the last week. Some of these dark markets in red, like South Dakota, a little bit here in Chattanooga, and along the border, have seen a contraction of over 20%. So there are some pretty big movers. Basically, if you're focusing on any areas today to call, you got some of these northern countries here, a little bit north of Minneapolis, also here in the Colorado and Wyoming region, a little bit here in the Pacific Northwest outside of Seattle. You might find a little bit of opportunity in Spokane, and then also in northern New York. So I would focus on some of those areas to call if you're finding there's a lot more opportunity there, a lot more loads being moved, a lot of growth. One of the markets we're going to focus on today is Louisville, Kentucky. So Louisville is not a huge market in terms of volume, but still quite significant in that part of the country. So this blue line here is the outbound tender volume index. And we can see here since really probably around the 23rd of February, we saw this massive increase. We increased by almost 40% volume levels over the last week and a half, and it looks like we're still pushing higher. Now, what you want to keep an eye on is while there are more opportunities out of Louisville right now, there's a lot more volume being pushed. So if you don't have customers, great market to call on. And if you do have customers and you're not seeing growth or you're not seeing additional loads, figure out why. Great opportunity to call and see what's going on. But this green line here is the outbound tender rejection percentage in that same market. So we're sitting right now about 8.3%, so about 3% above the national average. And you can see here as volume levels are starting to spike up. We saw this spike in volume at the beginning of February, and then shortly after that, rejections started to spike. Might be an opportunity that as we finally start to see volume levels go up, and now we're starting to see rejections go up, it could be a little leading indicator that there's a lot more demand, and all of a sudden, as carriers figure that out, they're going to be asking for a premium. So you're probably going to want to keep an eye on your rates out of Louisville. You might need to put a little bit of upward pressure on them as this volume continues to push. Keep an eye on rejections in that market, and you might see some opportunities. One last thing we're going to be looking at here is the LA market. I know coronavirus is a big buzz these days, and there's a lot going on. We haven't seen any immediate effects on the truckload side of things yet. In fact, out of LA, since the very end of February, there's been a big increase in volume. So there's actually more opportunities out of LA right now. We'll keep an eye on this market as the week goes on, see if there are some changes. But for right now, not a lot going on. I'm Luke, and that'll do it for today's broker update.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the freight tech revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
Welcome to your rail and intermodal update. I'm here with Mike Baudendistel. Mike, what do you have for us today?
So coronavirus is top of mind, and I think on the rail side, the segment that they're most concerned about is international intermodal volume. So these are volumes that go primarily in 40-foot containers, could also be 20-foot containers or 45-foot containers. And see the volume throughout the country. This is 40-foot loaded containers by metro area. We call it X market, and you see just a lot of red on the screen. But sort of in particular, the areas that are down the most, and there's some timing impact from Chinese New Year, but we have Los Angeles down about 52%, and then we have Seattle down 65%. So you do see that worse impact on the West Coast. Some of that's timing of the Chinese New Year. Elizabeth, New Jersey is still up year over year. That's supposed to come down the next week or two. There's a little bit longer sailing time there. As we go on to the next slide, this is just Los Angeles area specifically. 40-foot loaded container volume outside of LA, and you just see how far that this has fallen off. And if you compare it to recent years, in the Chinese New Year in 2018, you see it go down to about 2,000 containers a day. In 2019, you see it also be somewhat above 2,000 containers a day. Now we're at about 1,500. The challenge is how much of this is timing of Chinese New Year versus the fact that intermodal volume has been down. It was down throughout almost all of last year, right. and how much of this is just the slowing from the coronavirus and slowing of Chinese production. So this has gotten to be one of the first sonar charts I look at every day, right. as sort of an indicator of how much of this is this activity is really slowing coming out of the ports, and is it going to lead to things like component shortages for manufacturers? Is there not going to be enough materials that's stocked for just imported goods? Is there enough inventory sort of in the system to support the drawdown? So we don't know how much further that 1,500 is going to go down. That's a 7-day moving average of right. containers, and then the other question is how long is it going to be at a very low level, and are you going to see a recovery, or is it going to take longer than usual? Right, and one of the things you mentioned is that it's a little bit beyond seasonality at this mm-hmm. point, right? Yeah. Because we have expectations during Chinese New Year's. We've seen it historically, mm-hmm. and these other dips in the trend. So this has gone beyond what we typically see. Absolutely, and it's just a question of how much further is it going to go, and really on the consumption side, I mean, consumers are I think spooked by the drop in the stock market last week is the biggest drop in since the Great Recession, and right. then on there's also a lack of things to buy if companies like Apple are saying, well, they're not going to have those materials in place for consumers to buy. I think that's really something you're going to see really throughout the products that are manufactured in China, and then you have the economic impact of people not doing a lot of traveling. That's a big part of the economy too. So right. You're hoping that this doesn't translate into a global recession, I think, at this point. Right, and a lot of headwinds, especially for this time of the year mm-hmm. for rail and intermodal. Yep. What do you have up here? So this is comparing that same index we looked at before. So this is the outbound rail 40-foot container index year over year. So that same 52% I mentioned earlier. Right. And we're comparing this to the daily Freightos index for shipping rates. And so shipping rates, you see those lower year over year, also down 17%, but nowhere near as much of a drop as the volume. And a couple of reasons for that. I think there's less capacity in some of the capacity has been taken out of the shipping market from blank sailings, right. and those things, and then also from IMO 2020, some of those costs are being passed on to the customers there. Gotcha. Well, Mike, thank you so much. Insightful as always, and thank you so much for tuning in. That's going to do for this edition of FreightWaves Now, but the content doesn't stop here. We're always streaming around the clock, so check out our FreightWaves TV app on all your favorite streaming platforms, including Apple TV. Also, if you're looking for a little bit more deeper insights on the latest industry trends, check out our Passport program, where you also get access to our industry events such as FreightWaves Live Atlanta. Thank you so much for tuning in, and we'll see you on the next episode.
Is the trade war back on?
Trade war, full-blown trade war.
15% tariffs on $112 billion worth of goods.
Hours earlier, China announced tariffs of 5% and 10% on U.S. products.